Hello and welcome to this session. This is Farhat, in which we would look at a CPA exam simulation or an exercise that deals with imposed taxes. Remember, imposed taxes are non-exchange taxes. One major example is property taxes, and this is what we will work in this example. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Hello, my name is Farhat. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great. You are looking for some additional help, and we can help you. I strongly encourage you to visit my website, farhatlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website.
For its fiscal year end, September 30th X2, Chester County levied 510 million property taxes. The county collect taxes applicable to that year, X2, as follows. June 1st, X1 through September 30th, X1, 20 million. October 1st through September 30th, X2, 450. October 1st, X2 through November 30th, X2, 12 million. December X2, 3 million. It's very important here to look at a time frame. What am I looking at, and how am I going to be dealing with this revenue recognition? Well, you are being asked how much revenue was recognized in year 2. So let's take a look at year 2. X2. So we have X1 and X2, X1 and X2. And the fiscal year ends September 30th, X2. So the year ends September 30th, someplace here, September 30th, X2. So it starts from X1, September 30th. So we're looking at this period here. In this period, how much revenue we should recognize in this period? That's the question. So it's very important that you see when they receive the money in order to determine whether that revenue should be recorded in year X2 or not. This is what we will discuss in this session, going through each payment separately. Let's go ahead and get started. Well, here's what we need to know. Once the taxes are levied, the government has the right to collect the money, therefore they can create a receivable. So as soon as they levied this, they create a receivable. Now, for the sake of simplicity, I did not include an allowance amount for this example. I want to keep it simple. And bear in mind, we are using the modified accrual. It means we have to recognize revenue when measurable is available to finance expenditure in the current year, or that funds is 60 days available after year end. Now, haven't given all the background information, let's take a look at the journal entries and to figure out the amount of revenue we should recognize. I believe the journal entries would help you as well. Once the taxes are levied, we are going to debit property taxes payable, tax payable, and credit deferred inflow of resources. Well, why? Because we are entitled to this money, but we cannot record it as of yet when we levied it. Therefore, we have a receivable of 510. Now, keep in mind that from June X1 through September X1, we received 20 million. Let's go back to our time frame here. Here's what I'm going to show you in a different color. Some people happen to do what? Pay their taxes. So some people, during that summer, they paid their property taxes in advance, and they paid 20 million in advance. This is June till September. What should you do now? You want to go to Farhat Lectures, whether you are an accounting student, taking governmental accounting, or CPA exam candidate, Farhat lectures can help. Invest in yourself, study hard, and stay safe.